Welcome to the deep dive. Today we're aiming to build a really practical playbook for making moves in real estate, whether you're buying, selling, or looking to invest seriously.
Exactly. The goal here isn't just theory. We've gone through the sources to pull out, specific actionable tactics, the actual nuts and bolts to get you from just watching the market to actually closing deals.
Okay, right, let's unpack that. The sources seem to agree pretty strongly that the really good deals, well, they're often not the ones listed publicly on the MLS.
Mm.
So how do we find these hidden opportunities?
Well, the leverage comes from finding properties that aren't listed and where the owner is motivated. And one really effective strategy we saw, targeting empty houses.
Empty houses. Why specifically those?
Because an empty house is actively costing the owner money every single day. Think insurance, property taxes, maybe basic utilities. It's a financial clock ticking.
Nah, okay. That shifts the conversation. It's less about haggling price and more about solving their problem, right?
Yeah.
But how do you find the owner if they've already moved out? Isn't talking to neighbors sometimes
Sure.
tricky?
It can be, but the speed advantage is huge. Neighbors often know why it's vacant, maybe an inheritance, maybe job relocation, maybe financial stress. That kind of intel before it hits the open market, that's a massive edge.
Right. Okay, so you find a potential off-market deal. Next hurdle is funding. What about getting into the game without, a huge pile of cash for a down payment? What tactics came up?
Two main ones stood out. First, the lease option. Basically, you as the investor secure a long lease, maybe below market rate, then you turn around and sublet it. Instant cash flow potential right there.
Okay, the lease option and the second.
Seller financing. This takes some finesse. You have to really convince the owner that you're credible, reliable, persuade them to essentially act as the bank, even if their first instinct was just to get cash up front.
Got it. Credibility is key there. Now, here's where things often seem to fall apart for people. You find the deal, maybe even line up potential financing, but the actual selling part, the follow-up,
Yeah.
the sources emphasize persistence, right?
Oh, absolutely. It takes incredible commitment. What's interesting is that diligent follow-up, it's basically effortless, and it costs nothing but time. We saw this one example, a big commercial deal.
Yeah.
Took over 100 contacts, emails, calls, meetings, over 4 years to finally close.
Wow, 4 years.
Yeah, it just proves that sometimes success is literally just about refusing to give up, saying yes to finding a way to make the deal happen no matter how long it takes.
Okay, let's switch gears a bit. Thinking bigger picture, building wealth. The BRRR method gets mentioned a lot. Buy, rehab, rent, refinance, repeat as a growth engine. But what about security? How do you manage risk, especially against vacancies?
Well, what's really interesting here is the multi-unit approach. It's about spreading risk. See, with a single-family rental, if your tenant leaves, you're at zero cash flow instantly.
Right, one vacancy hurts a lot.
Exactly. But with, say, a fourplex, you could potentially lose, maybe 40% of your tenants, maybe one or even two units are empty, and you might still break even or even have positive cash flow. It just stabilizes things dramatically.
That makes a lot of sense. Okay, final piece then. Long-term wealth preservation. Taxes, always a factor. What are the absolute must-know tax advantages for real estate investors?
Yeah, real estate has some powerful ones. First, depreciation. On residential rentals, you get to write off the building's value over 27.5 years. That's a paper loss that shields income, regardless of market ups and downs.
Okay, depreciation. What else?
And then, critically, especially for long-term holders, the 1031 exchange. You absolutely have to understand this. It lets you sell a property and roll all the proceeds into a new, similar property, deferring capital gains taxes.
Deferring. So not eliminating, but pushing them off.
Essentially, yeah. You can keep doing it, trading up, potentially deferring those gains almost indefinitely. It's how significant wealth can be built and passed on, minimizing the tax bite along the way.
Okay, so that really rounds out the playbook. Find off-market deals, maybe targeting empty homes, use serious persistence to actually close, spread your risk with multi-units, and lock in those tax advantages like depreciation and the 1031. Seems clear.
It does, but it brings up a final, maybe more personal question for you, the listener. We talked about that relentless persistence, needing maybe 100 touches. The sources hint that just trying harder often isn't enough. Your environment shapes your actions.
How so?
Well, think about it. How can you engineer your personal environment, your daily habits, the people you talk to regularly, what you focus on, to make yourself execute? To ensure you make that 100th call or meet that tight 131 deadline? Relying on willpower alone is tough. How will you set up your world to guarantee follow-through? That's the real challenge, moving from knowing the playbook to actually running the place.